Okay, today we're going to do lesson 5.3, Dishonored Checks and Electronic Banking. Our learning objectives are complete record keeping for a dishonored check, journalize an electronic funds transfer, and journalize a debit card transaction. So to record a dishonored check on a check stub, there's a few things we need to take care of. You first may want to know what a dishonored check is. A check that a bank refuses to pay is called a dishonored check. Banks dishonor a check for many reasons. A check dishonored by the bank because of insufficient funds in the account of the maker of the check is called a non-sufficient funds check. A non-sufficient funds check is also known as an NSF check, NSF meaning non-sufficient funds. Banks may also dishonor a check for other reasons. 1, the check appears to be altered. 2, the signature of the person who signed the check does not match one on the signature card of the bank. 3, the amounts written in the figures and in words do not agree. 4, the check is post-dated. 5, the person who wrote the check has stopped payment on the check. These are all reasons that a bank could refuse to pay. So here we have our check stub, and you see here we've written dishonored check. So balance brought forward, subtotal, this was the check, dishonored check, and the subtotal. Okay, we asked the other day what the other meant, and that's what it did. So we would write dishonored check under the heading other. We didn't know what that other thing was for the other day. Number 2, write the total of the dishonored check in the amount column, which is $225. This is the amount of the dishonored check plus the service fee. Okay, I told you if you bounce a check, you get charged. It's not fun. So the dishonored check amount here was $185. The service fee was $40, which is a total of $225. And then calculate and record the new subtotal, which would be $1,887. Okay, a new balance carried forward is not calculated until after check number 52 is written. So we're not going to finish calculating unless we write a check for number 52. And we would put that right here, and balance carried forward. We calculate the balance carried forward. Okay, journalizing a dishonored check. So on August 29th, received notice from the bank of a dishonored check from Valley Landscaping for $185 plus a $40 fee, totaling $225, which is memorandum number 52. So Delgado Web Services receives a notice of the dishonored check and the fee from the bank. We see this actually right here in the T accounts. So accounts receivable increases $225 from Valley Landscaping, and cash is going to decrease $225. All checks received are deposited in Delgado Web Services checking account. The entry for each cash receipt transaction includes a debit to cash. If a check is subsequently returned as dishonored, the previous cash debit for the amount of the check must be offset by a cash credit. The asset account cash is credited for $225 right there to show the decrease in assets. Okay. When Delgado Web Services originally received the check from Valley Landscaping, accounts receivable, Valley Landscaping, was credited to reduce the balance of the account. When Delgado Web Services finds out that the check was not accepted by the bank, the accounts receivable Valley Landscaping must be increased to show that this amount plus the bank charge is still owed to Delgado Web Services. The asset account right here, accounts receivable Valley Landscaping, is debited for $225 to show the increase in assets. We have our general journal, okay, the date, which is August We're on page 8, August 29th, so all of the dates above this would be August. So we just have to put 29. Accounts receivable, memorandum 52, debit $225, cash is credited $225, which we'll state through here. Write the date in the date column. Write the title of the account to be debited in the account title column. Record the amount debited in the debit column. There you go. And with cash, same deal. There you go. Write the source document in the document number column. Okay, moving on to electronic funds transfer. A computerized cash payment system that transfers funds without the use of checks, currency, and other paper documents is called electronic funds transfer. Electronic funds transfer is also known as EFT. Many businesses use electronic funds transfer to pay vendors. To use EFT, a business makes arrangements with its banks to process EFT transactions. Arrangements are also made with vendors to accept EFT payments on account. When a transfer of funds from a business's account to a vendor's account can be completed via the internet or a telephone call. That was a long explanation for EFT. Okay, so let's talk about this one. On June 5th, paid cash on account to Merniac Enterprises using EFT, memorandum number 18. Delgado Web Services does not use EFT transfer. However, a different one. Scratch that, rewind, sorry. Here we go. Merniac Enterprises. Sorry, so let's look at this transfer. First we have the T accounts. Accounts payable decreases by $380. That's how much money is owed to Delgado Web Services. And then cash is also decreased by $380 because you're paying it. You're using it electronic funds transfer. So no checks are written, nothing's done, but your source document is memorandum number 18. So you write it in. You have June 5th, write in the date. You have the accounts, the title of the account to be debited is Merniac Enterprises, accounts payable. Okay, it's a debit of $380. And your cash is going to be decreased, a credit of $380. And your source document is M18. So a bank card that automatically deducts the amount of a purchase from the checking account of a cardholder is called a debit card. I'm going to assume that most of you in the room have a debit card in your possession. I have the debit card. It's, goes directly to my checking account at the bank. That's how I pay for a lot of things. You just have to keep track of what you pay for. You have to keep track of where you use it. There is one major difference between a debit card and a credit card. When a purchase is made with a debit card, the amount of the purchase is automatically deducted from the checking account of the cardholder. A debit card eliminates the need to write a check for purchase. However, the effect is the same. The checking account balance is reduced by the amount of the purchase. A debit card also eliminates the need to carry a checkbook. When using a debit card, it is important to remember to record all purchases to avoid errors in the checking account. So if we look here, I have June 8, purchase supplies for $75 using the debit card, memorandum 21. So our supplies increases, it's an asset, it's on the debit side, and our cash decreases, credit on the asset, on the asset side. And we record it in our general journal. So we have the date, supplies, $75 debit, and cash is a $75 credit, and memorandum 21. Okay, that's it. Let's list 6 reasons why a bank may dishonor a check. There were a few of them actually in the slide, and I spoke to the rest of them. There were 5 of them I listed on, I spoke to, and one of them was just non-sufficient funds. The check appears to be altered, the signature on the check does not match the signature on the card, and you can read the rest of them. Which account is credited when electronic funds transferred is used to pay cash on account? Okay, the cash is credited because you're paying cash, it's decreased. On the asset side, credit is the one that is decreased. Which account is credited when a debit card is used to purchase supplies? Same deal, cash. Debit card is like writing a check, which is also cash.